Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I Tell.
All right. Hey, guys, it's Mark Eitel, and you are listening to the Mr. Mortgage Show. And, guys, you are in the right place if you are frustrated, angry, confused, curious, if you've got questions about real estate mortgages, what's going on with this crazy housing market. Where are interest rates going? There's just this train keeps rolling. Interest rates are holding their ground. Housing prices are holding their ground. Affordability is just at an all-time low. Where are we going, guys? Everybody wants to know, but you're in the right place if you want to know. We are going to dive into all of that. We're going to give you the data, not the headlines, but the data, the tips, the tricks, the strategies. We're going to answer all your questions so you are armed and ready to go out and make better real estate and mortgage decisions for you and your family. Guys, if you have questions or comments and you want them on the air, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. And Jen is womanning the hotline. She'll get your questions on the air. That's 855-462-7292. Again, you can text that number as well. Or head over to MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page, click that email icon, and you can shoot her your questions over email. She will read them on the air for you. She is ready to go back there. She's got her track shoes on and her Richard Simmons headband. Actually, do you know Richard Simmons never wore a headband? I saw that. I don't remember what they call it, but there was something bouncing around on social media, and I always thought he did, and I guess he never wore a headband. So anyway, she's already given me the stink eye, guys, but she's back there ready to go. Just call or text or email her your question. She'll get you on the air. But hey, guys, the CPI numbers came out this week, and drum roll, please. Inflation is here to stay. Well, not here to stay, but it's just not ready to leave yet, right? It's like that uninvited house guest that just is not going anywhere. Guys, it's sticky, but if you're a listener of the show, you know that. We've been talking about it for well over a year now. And it's not a surprise if you're part of the Mr. Mortgage family. I'm not going to delve too deep into why. We've talked in length about it on prior episodes. I'll answer any questions you have about it. Of course, it's the response to inflation and the continued increasing of the overnight interest rate. And with this most recent data released with the CPI numbers, it's likely that we've got another rate hike this year. And again, if you're a listener of the show, that's not a surprise. I don't want to beat that point to death because we talk about it so often. If you have questions, just call or text them in. I'll be happy to address it. The greater impact on mortgage rates, as far as what the Federal Reserve is doing, stems from the balance sheet runoffs, and that's not changing anytime soon. So I think we're in this interest rate environment for a while. But I want to share some wins that we're seeing even in this interest rate environment. And there are a couple key factors that are setting up opportunities if you're a buyer to use a rate buy down strategy. Now, none of this changes the fact that real estate compared to a year or two ago is ridiculously expensive, right? We've seen an unprecedented appreciation cycle. Now, we've also seen those prices continue to rise in most markets, even with these higher interest rates. So it's not likely that the crash that some of the TikTokers and Instagrammers are calling for is on the doorstep by any means. It's just not setting up for that. But anyway, housing values are holding. Sellers are starting in some markets to be willing to negotiate. And the reason I'm setting this backstory up is that gives you as a buyer an opportunity to use a seller contribution for an interest rate buy down. Because as buyers, we have a tendency to go in there and think the lowest sales price makes the most sense. And in a lot of instances, it does. I totally get that. But if you're budget conscious and you're trying to have the lowest monthly payment, which is the way most of us buy things, whether right, wrong, or indifferent, I can ask 10 people just walking up and down the grocery store aisles what their car payment is, and they can all tell me what their car payment is, but none of them can tell me what their interest rate on their car is. And I've used that example before where people can tell me to the penny what they pay each month, but they have no idea what the interest rate is. So that right there dictates that interest rate is not as important in most people's mind as they think it is. It's the budget number. So I did some math before we jumped on the air, and this was based on a conversation that I had this week. This individual was borrowing $300,000, and let's use, worst case of the week, 7.5%. So a $300,000 loan, 30-year fixed rate at 7.5% is $2,097 a month, principal and interest. Now, they were considering offering $10,000 less on the property, which would have reduced their loan amount to $290,000. Now, $290,000 loan at 7.5% is a $2,027 monthly payment. So they save $70 a month, but they're paying $10,000 less for the property. Now, here's what we talked about, and this is what they went back to the seller with and proposed, and everybody agreed, and they're moving forward under this strategy. A $300,000 loan amount with a $10,000 seller contribution, right? Because they were going to discount the price by $10,000. So instead of discounting it, they're going to hold the price and then give the buyer a $10,000 contribution. Net is the same to the seller. They're happy. But the buyer uses that $10,000 and buys the rate down from 7.5% to 6.5%. So not an obscene buy down. That's very realistic. But here's the thing, guys. A $300,000 loan at 6.5% has a principal and interest payment of just $1,896 by comparison, a full $200 less per month. So my point in that example is you can see how much more the needle is moved by the reduction in interest rate versus the reduction in price. And prices are holding. In most markets, we're still seeing appreciation, albeit single digit, but nobody anticipated that. Everybody anticipated the market to ease, and it's not happening. Prices are going up because just not enough people want to sell. I read a statistic this week that said 90% of all outstanding mortgages are under 5%. That's mind-blowing to me. So where are interest rates going to have to come back down to? And what's the likelihood of that happening before we start to see people wanting to sell properties again? So because of that, the prices are sticking. And if the prices are sticking and there's a willingness of the seller to just knock 10 grand off the price, you can use that $10,000 in that example to affect your budget in a far more favorable fashion than reducing the price by $10,000. So I share that example because with all of the equity people have, and with where interest rates are, we're seeing more and more people, especially the people that are going through that buy owner program. And we can talk about that, but selling by owner, they're not paying the real estate commission and they're willing to give some of that back to a potential buyer to make the deal more attractive. So the reason I'm sharing that, and we'll touch on some more examples this week of where people are bucking the trend and finding an opportunity, even in this market, to make some things happen. And with where rents are, man, in a lot of places, using some of these strategies to buy a place still makes a ton of sense. So guys, you hear the music, you know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this very short break. We'll be back with more of the Mr. Mortgage Show. Raise your hand if you are freaked out by what's happening in the banking world. Well, no, put your hands back on the steering wheel. It's all starting to feel like a house of cards. And what about that $17 billion, yes, billion with a B, dollars worth of bondholder money that was lost in that Credit Suisse takeover? Right now, I'm hearing more and more people talk about a flight to safety, and they're looking at gold and silver and other precious metals, but also rental property. Yep, income-producing rental property is starting to become sexy again. Guys, we've got an amazing loan program called the Landlord Loan. It's an easy way to acquire rental property. If you've got good credit and the assets, we don't even look at your personal income. We look at the income produced by the property. Assuming that it supports the debt, boom, you're a landlord. Check us out at MrMortgageRadio.com. That's MrMortgageRadio.com. My name is Mark Eitel, NMLS 1929005, and my team and I are here and happy to help. Check us out at mrmortgageradio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, if you have questions or comments, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline, and Jen is womaning the hotline. She's already taken some questions back there, and she will get your questions on the air. Or head over to mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page. Click that email icon and you can shoot her your question via email and she will read it on the air for you. And I already saw one of the questions. It was actually quite a good question. We talked before the break about using a seller contribution to buy the interest rate down. And the question was, can a buyer buy their own interest rate down if the seller is not willing to contribute? And yes, you can. That's another place we're seeing people win right now because, yes, the interest rates are frustrating, but people have never had this much equity. I read a statistic a couple weeks ago on the air where the average homeowner has a couple $100,000 in equity, which is mind-blowing to me. And I think it's a 30% or 28% of U.S. households don't even have a mortgage, so it's 100% equity. That's crazy to me, how equity rich we are as a nation. And some people are taking that a little bit of that pie when they sell, cutting a little piece off and using it to buy their interest rate down or to put a slightly larger down payment down, reducing the principal amount and controlling their new monthly payment that way. Another strategy is pay off all your consumer debt. So when you move, the only payment you have is the new house payment, and that's making it a little bit more attractive for some people. So again, guys, not discounting that it's frustrating out there, but if you own a property, you've never had this much buying power because of all of the equity you now find in your current property. So anyway, that was a brilliant question. I wanted to address that one. It didn't have a name on it, but I figured I would just jump on that one. Hey, Jen, go ahead.
Penny's text is first up. Can I roll my student loans into the mix when doing a debt consolidation rec refi?
Hey, Penny, that's a great question. Yes, you can pay off your federal student loan debt if you are not one of the lucky few that are getting the debt forgiveness. And I did, believe it or not, I did have a client who was surprised to get a check in the mail for a rebate on their prior student loan payments, and they were so excited they logged into the portal to find that they are now zeroed out. So I guess some people are actually seeing some student loan relief. Now, this particular gentleman had been paying on his student loans for almost 30 years. So I guess that was a prerequisite, the age of the student loan debt. So if you're not one of the lucky ones, Penny, you can roll that into the REC refi. And guys, REC, R-E-C, is the debt consolidation refinance program that we developed. It stands for Reduce, Eliminate, and Consolidate. And if you want to learn more about how much you can save potentially, because not everybody can save, depends on your current debt loads. If you go to REC, R-E-C-R-E-F-I, recrefi.com, there is a debt consolidation calculator there, and you can do the math for yourself, plug in all of your consumer debt, and see if it makes sense. Even at today's interest rates, some people are super surprised to find out that that is an opportunity for them. But yes, Penny, to answer your question, you can pay off your student loan debts as part of the REC refi. Hey, Jen, toss me another question.
Daniela sent this email. I'm in Florida and was hoping to use Hometown Heroes, but now they're out of money. When will there be more funds available? I really don't want to wait, but I need the grant money.
Hey, Daniela, that was fast, right? Where did the money go? There was an overwhelming response to the expansion of the Hometown Heroes grant program. The good news is there are several grant programs in Florida as well as nationwide. One is Chenoa. There are some lender-specific programs, but you would be surprised that there are a handful of grant programs that are available that will assist you with your down payment and a portion of your closing costs. And don't be discouraged if the grant you had your eye on is temporarily out of funds. Most of those replenish annually. But if you don't want to wait, you may be pleasantly surprised to learn that there are some other options out there. I'd be happy to help you. We can walk you through it. Just give us a call or shoot us an email when we're not on the air. We'll set up a call and I'll walk you through it. But there are more down payment assistance programs than just the ones that get the headlines. And there's some pretty amazing programs out there. So great question. Hey, Jen, do you have another one ready?
Mia sent us this. We're just starting to think about buying a rental property. Your landlord loan sounds interesting. How's it different from a regular home mortgage?
Hey, Mia, that's a great question. So sometimes I have a tendency to confuse people with my answers. The landlord loan is a normal mortgage. It's either a 30 or 40-year mortgage. Typically, it's a 30-year mortgage, fixed interest rate. If you choose the 40-year option, you can have the first 10 years as interest only, but again, a fixed interest rate, so it acts just like a traditional mortgage. The big advantage for investors with the landlord loan is their personal income doesn't get underwritten unless necessary. But assuming that the property generates enough cash flow to support the debt, it's the rental income, or if it's vacant, the projected rental income on that property is what's used to service the debt. Assuming that the property throws off enough cash each month in rental income to cover the principal, the interest, the taxes, the insurance, and if there's an HOA, the homeowners association as well. If it covers that expense and it's a 1-to-1 ratio, then you don't have to disclose your personal income as part of the underwriting. That's the major difference with the landlord loan and why so many people gravitate to it when buying investment property. So as far as the structure of it, it's just like any other mortgage. It's just that income component is what's significantly different with that loan program. I know it can get confusing when we have all these catch names and catchphrases, but that's it. Again, great question. Thank you for that. Hey guys, you hear the music? You know what that means? That's my cue. We'll be back in a few. Sit tight. This is going to be a short break. On the other side, we'll be back with more of the Mr. Mortgage Show. So you think interest rates have gotten too high to refi? Well, not so fast. There are several reasons people refinance. Sure, lowering your interest rate is one, but there's debt consolidation, home improvement, unexpected medical expenses, pulling out some equity to go buy an investment property. Heck, I even know of one guy who refinanced his house so he could buy his mistress a condo. But let's jump back to debt consolidation for a minute. I'm working with a client right now. His name is Ben. He's going to refinance his house, pay off a host of credit cards, and 2 truck payments. And yes, his mortgage interest rate is going to go up, but his monthly expenses are going to go down significantly. And that monthly savings is going to get he and his family back on track. Guys, if you've got questions, check us out at mrmortgageradio.com. That's mrmortgageradio.com. My name is Mark Eitel, NMLS 1929005. I host the Mr. Mortgage Show, and we are always here and happy to help. Check us out at mrmortgageradio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned into the Mr. Mortgage Show, and we are so glad you're with us. Friends, if you have questions or comments along the way, just call or text 855-462-7292. That's the Anytime Hotline, 855-462-7292. Jen is womanning the hotline, and she'll get your questions on the air. Or you can head over to mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page, click the email icon, and Jen will read your questions on the air if you send her an email. But speaking of Jen and your questions, let's get to more of them. Go ahead, Jen.
Letty emailed a question. We've got the FSBO-Zilla book and are going the buy-owner route, mainly because saving the commission will give us the extra money for buying our next house. Is the timeline the same for a buy-owner contract? Thanks for everything.
Hey, Letty, thank you first and foremost for the question, of course, but for getting your copy of the book. I am so excited. To answer your question, the timeline is the same. You can write the contract with a 30-day close. Let's talk specifics if you've got an offer, and we can help you establish that timeline so you can comfortably make that move. And I don't know if you are utilizing the transaction coordinator, but if you're not, you'll definitely want to manage the timeline conscientiously. But if you are, they'll jump in and make sure that the inspections are done on time, the appraisal's done on time, keep everybody in the loop so that you know that you're closing on time. And kudos to you, because that's what I was talking about in the opening segment, that people are finding opportunities. And again, guys, going the for sale by owner route is not for everybody. It's simple, but it's not easy. We talk a lot about that. Losing weight and getting healthy and getting in the gym, that's simple, but it's not easy. There's so many things in life that if you just follow the plan, you can do it. That being said, if you are a do-it-yourselfer and you jump in, this is the perfect example. Now, Letty has that additional money to use for a rate buy down, to pay her closing costs, to put a bigger down payment down on the purchase, and it makes the move more palatable in this environment. With the higher prices and higher interest rates, every penny counts. So thank you for checking out the book. Guys, if you don't know what we're talking about, FSBOZILLA is how you get your copy of the book. FSBOZILLA, FSBOZilla.com. And check it out for yourself. If you are one of the brave, one of the few, and you want to jump in and do it by owner, the book will help you every step of the way. But thanks for that question, Letty. You should be fine with 30 days. I'm happy to jump on the phone with you and discuss details just to make sure that everybody is ready and able to move quickly. So great question. Thanks for that. Go ahead, Jen.
Margot is asking, if I go for debt consolidation refinance, does it mean I'm starting my mortgage all over again?
Hey, Margot, that is a great question. And when you say start your mortgage all over again, I'm assuming that you mean for another 30 years, right? So if you're 4 years into your mortgage, you've only got 26 years left if it's a 30-year mortgage, and you're asking, is it going to be a new 30-year window? But here's another super cool thing about the rec refi. If mathematically it makes sense and you want to do it, you can structure it for 26 years. So the term of your original debt stays the same with the rec refi. Now, again, for a lot of people, going the 30 years and starting over, as frustrating as it is, mathematically they prefer that payment. But if it makes sense, we can write the loan for 25 years and 3 months, 26 years, whatever it is. We can do a specific term so that you're not extending the life cycle of your original debt. I hope that makes sense, but that's a great question. And that's something that a lot of people are apprehensive about. Like, I don't want to go another 30 years. I'm 4, I'm 5, I'm 6 years into this. And guys, that's where that calculator at refi, RECREFI, helps out tremendously, because you can put 26 years in the term and see what that does to the payment, if indeed that is your goal. So brilliant question. I appreciate that one. Hey, Jen, do we have time for another question?
Eddie sent us a question. My ex got the house in the divorce, but we're still both on the mortgage. It's paid on time, thanks to my alimony. Will this be a problem when I buy a new place for myself? Technically, she's responsible for it. Thanks.
Eddie, you sound a little jaded, brother. Here's something that's super interesting. So this is a great question. And this applies to anybody who's ending a relationship, who owns real estate together. Whether married or unmarried, you're faced with this dilemma. We both are on the mortgage, we're both on the deed. Now we're no longer together. in the case of your circumstance, you're still on the mortgage. I'm assuming that in the settlement agreement, she got the property. So you might not even be on the deed anymore. As part of the settlement, you might have executed a quitclaim deed and removed yourself from ownership of the asset, but you're still on the hook for the debt, right? So brilliant question. If that's the case, then you're going to have to show that the mortgage is being paid on time by her. Now, your credit report, because you're still on the mortgage, will indicate that the mortgage company is getting their money on time, but you're going to need her help to show that she's the one paying it. Because if you're paying her alimony, that debt is going to count against your debt to income ratio. If it's written into the marital settlement agreement, X amount of dollars a month, that's going to come into play when we calculate your debt to income. If you can't document that she's paying the mortgage, that mortgage payment's going to be added to your debt to income also. So you're going to need her assistance to show, and sometimes the marital settlement agreement's not enough. You'll need her bank statements to show that she's making that payment. So brilliant question. And guys, this is one thing we talk a lot about to primarily boyfriend, girlfriend, unmarried couple, friends, sisters, brothers that are buying a house together, that if you choose one to move on and the other to keep the place, the cleanest way to do it is to refinance one off the property. Now, in this interest rate environment, a lot of people are resisting that because they don't want to give up that 4% or 5% or 3% interest rate. I get that. But if you don't refinance yourself off the mortgage and take yourself off the deed, then you're faced with this circumstance. So a quitclaim deed is the easy way, but rarely, guys, is it the best way to facilitate an ownership change if you're both on the debt as well. So, man, I'm losing my voice again. I don't know how many of you noticed last week. No more karaoke for me. I cannot karaoke all night and talk all day. Remember that Kiss song, Jen? I want to karaoke all night and then talk on the radio all day. I can't sing the song. That's why I shouldn't be karaoke. And hey, guys, you hear the music? You know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this short break. We'll be back with no more karaoke, but more of the Mr. Mortgage Show. Let me tell you a little story about a man named Jed. Well, this is not a story about Jed, but it is a story about Mary. Mary is an awesome single mom who's been raising her daughter in a 1-bedroom, 1-bath apartment for the last 11 years. That's right, 1 bedroom and 1 bath. Hey, they've made the best of it. They've got bunk beds in there and it's worked. But her daughter's now a teenager and it's becoming a challenge, especially sharing that bathroom. She decided to jump in and become a homeowner. We got her approved with an FHA loan. That's right, I said it, FHA. Hey, if your agent's telling you FHA and VA loans are not getting accepted, you are working with the wrong agent. Contact me and I'll get you in touch with a really great agent. Hey, but back to Mary. She jumped in and she is now a proud homeowner. They have their own bedrooms, but more importantly, their own baths. They couldn't be happier. Guys, if you'd like to learn more, check out MrMortgageRadio.com. That's MrMortgageRadio.com. My name is Mark Eitel, NMLS 1929005. Check us out at MrMortgageRadio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Guys, great questions so far this week. If you have questions or comments and you want to get them in, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline, and Jen is womanning the hotline. She'll get your questions on the air. If you prefer to shoot us an email, you can do that by visiting MrMortgageRadio.com. That's MrMortgageRadio.com. At the bottom of the page, you'll see an email icon. If you click on that, you can shoot her your questions via email. But hey, I am eager to see what we have next. Hey, Jen, do you have more questions ready?
Marina wants to know, is it hard to sell a house if we have a reverse mortgage? We don't have a mortgage now. We're just figuring this all out.
Hey, Marina, that's a great question. The reverse mortgage is so very misunderstood. But if you've got a reverse mortgage and you're selling your property, assuming that you have equity in the property when you sell, it's a simple transaction like any other mortgaged property sale. The title company or the title attorney will order the payoff. Whatever the mortgage balance is satisfied at closing. The rest of the equity is yours and you move on. And as far as that's concerned, it's like you have a normal mortgage. It's just a lien on your property. Now, if there's no equity in your property when you choose to sell, it's a different circumstance. But by and large, it operates like any other mortgage. So I hope that helps. If there's a specific scenario that you want to talk through, I welcome the opportunity to discuss it with you. And that goes for anybody, guys. The reverse mortgage holds a special place in my heart. I am happy to discuss it with you. It's not right for everybody, but it makes a huge impact for the right person, the right scenario. So we're seeing some life-changing impacts with it. As crazy as that sounds, it does make a big difference. Hey, and that brings something to mind. We opened the show with a win on using a contribution to buy the rate down, and I promised you another win. It just popped into my head. I'm in the middle of a circumstance now with a client, and this is really interesting. So we talk all the time about the first home layaway plan that we came up with, where if you've got younger kids or grandkids, take some of the equity out of your property, buy a rental property, put a tenant in there, and then later when your child or grandchild is ready to strike out on their own, you can sell them the property and use the gift of equity strategy. So you're basically securing their first home opportunity now, and you're allowing someone else to rent the property until the child or grandchild's ready, paying down the principal, building up an equity nest egg that you can gift the child. So it makes it easier for them to buy the property. They don't have to come up with a down payment or closing costs. And if there's enough equity, you can even pull your original investment out. So because we talk a lot about that, people are often bouncing scenarios my way. And an interesting situation came up this week where a gentleman and his wife want to help their grandchildren, both grandchildren, buy their first home. Well, the kids are in their 30s, the grandkids, so they don't have time to use the first home layaway plan. They've got a ton of equity in their home. They've got a very little mortgage. I want to say it's around $40,000, but they don't want to take an equity line because they're on a fixed income. They don't want to make those payments. This is where the reverse mortgage is coming in. They're doing a reverse mortgage. They're going to take a portion of the equity to gift the grandchildren so the grandchildren can each go buy their first home. And their grandparents, this husband and wife, don't have to sell their property to make it happen, and they don't have a monthly mortgage payment. So it's an interesting use of the reverse mortgage program. So I wanted to share that, and that would not be available to this couple if it wasn't for this crazy run up in home values over the last couple years. And now they've got all of this equity that they never anticipated having. So they feel a little more comfortable using it in this way. And again, that scenario is not right for everybody, but it's a scenario a lot of people don't consider. And it's giving them the opportunity to help their grandkids get started on their own equity journey. So I wanted to share that. But anyway, I know we've got some more questions. So Jen, throw another one my way.
This one doesn't have a name. If I'm going the for sale by owner route, do I have to tell potential buyers about any problems with the house?
Ooh, yeah. I'm of the mind that it's always better to disclose because you don't want to be accused of hiding anything. And I know we hear that caveat emptor, what is that? Buyer beware. My advice is always to disclose what you know so somebody can't come back to potentially sue you. But why don't you bounce that question off a real estate attorney? And I'm happy to get you in touch with one who can help. So I am of the mind that it's never a good idea to hide any known defects in a property just because I don't want the bad mojo, not to mention any legal ramifications that may or may not come from that. So great question. Just not super comfortable answering that one. I might direct you to an attorney. Hey, Jen, throw me another question.
Here's one from Elena. What is the best way to utilize my down payment money to maximize my buying power?
So great question. And there's a couple ways to look at that. We talked about it in the opening segment, how buying the rate down reduces your monthly payment. You can go that route. You can put as much money down as possible to reduce your principal amount, which will lower your payment. Not as much as lowering the interest rate. There's a lot of strategies. The big things I would need to know is how much of a down payment are we talking about, and the purchase price of the property. And I would be happy to lay out a few different scenarios showing you how, with maybe a slightly lower down payment and a rate buy down, or a larger down payment with a smaller principal amount, or maybe waiving escrows so you're putting even more money down. I think there's a few strategies that you would want to look at. I'm happy to run those scenarios for you, but brilliant question. And I would point you back to the first segment of the show when we opened talking about rate buy downs. So great question. Hey, Jen, can we get one more in?
Chelsea sent us an email. When I tuned in, you were talking about a free book for selling by owner. It sounded like you called it Godzilla. What is the name, and how do we get a copy?
Hey, Chelsea, that's FSBOZilla, FSBOZILLA.com is how you get a copy of the book. And that's the how-to guide, if you will, that we wrote in helping people go the buy owner route. All of the pitfalls and some workarounds for the potential pitfalls, as well as some ways that we can jump in and help with the approval process of the potential buyers. But not Godzilla, but close. FSBOZilla, FSBOZILLA.com. Hey, Jen, throw me another question.
Oliver sent us this. It's a long story, but there is a judgment against me for a car accident I was in. I'd like to take out a reverse mortgage to pay off the judgment and give myself a little cushion each month. Will the judgment cause a problem?
Hey, Oliver, great question. So you can pay the judgment off with the proceeds from the reverse mortgage, assuming that there's enough equity. Let's start there. Assuming that there's enough equity, you can use the proceeds to settle Chapter 13 bankruptcy. You can use the proceeds in this instance to pay off a judgment that might be looming over your head, and that's going to be a big check that you have to write. Or what we talked about a moment ago, the equity extraction, and use that money to help your grandchildren buy a property, or your children. An equity extraction to buy an investment property with the landlord loan. So the use of funds with the reverse mortgage is quite liberal. So great question. I appreciate that one. I think you will be happy to know that assuming there's enough equity in the property and in the transaction, you can use it to pay off that judgment. So Oliver, if you want to go over details, I'm happy to have a conversation with you. Just reach out to us off the air, and we'll go over the details of your scenario. And that applies to anybody, guys. If you've got reverse mortgage questions, I'm happy to have a discussion with you. Just go to MrMortgageRadio.com and click on that More About Reverse link. But guys, you hear the music? Oh my gosh, that means we have wrapped up another week of the Mr. Mortgage Show. Time flies when I'm yapping behind the mic. I hope you guys had as much fun as we did. If you need us during the week, check us out at MrMortgageRadio.com. That's MrMortgageRadio.com. Otherwise, Jen and I will be back next week right here. Same bat time, same bat station. Guys, have an amazing week. Be good.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages, right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.